Volatility over tariff policy could be leaving the United States behind the rest of the globe. In his recent piece for the Financial Times, Rockefeller International Chairman Ruchir Sharma says the world is moving on to trade without the U.S. He joins us right now. Ruchir is also the founder and CIO of Breakout Capital and the author of What Went Wrong with Capitalism, which, by the way, is a huge defense of capitalism. Ruchir, thank you for being with us this morning. What do you see that's happening in the world of trade that you think the U.S. is being left behind?
Well, Becky, this has been a trend that's been going on for the last decade or so, that if you look at the 10 fastest growing trade corridors in the world, only 2 of those involve the U.S. Now, and 5 of those involve China. And China has clearly become the world's largest exporter, and also its share of global manufacturing is at a new high. So I think what's going on here is that countries are quietly nodding to what the U.S. wants when it's brought to the negotiating table, as we saw with Mexico and Canada a couple of days ago. But beyond that, what they're doing is striking trade deals with other countries because they still view trade as a very essential part of their ecosystem. So therefore, the U.S. share in global trade has been declining over the past decade. It started off with Trump's first term, continued through Biden's term as well, because remember, he also carried on with the policies of tariffs against China and other countries. And now I think what we're going to see is that that movement is only going to accelerate and gain further pace under Trump's second term. So I think that this is something the U.S. just needs to acknowledge and deal with, that yes, today it is the indispensable nation. It runs the world's largest trade deficit. There are a lot of people selling into the U.S. But I think a lot of countries are quietly moving on, realizing that they just can't be that dependent on the U.S. This is happening on trade. This is happening even with bilateral payment systems of currencies. And that, I think, is eventually something that could come to hurt the U.S. economy as well.
You know, Ruchir, this is something that, look, it's a movement that both parties have embraced. When Trump was elected back in 2016, he was running against Hillary Clinton, who was also opposed to TPP, the Trans-Pacific Partnership. So it wouldn't necessarily have mattered whether a Democrat or a Republican was in office. These are movements that have been populist movements that have really spread across the country. I think it's the feeling of workers who felt like they've been left behind, that manufacturing jobs have left. So what's the country to do when that sentiment is so rife, when you look and feel like you're on the losing end of some of these things? And what do you think the longer term implications would be?
So you're absolutely right, Becky, that so therefore even I made the point that under Biden, these policies continued, including the tariffs against China. But in terms of what have been the results over the last 8 years of these policies is something worth evaluating, and then also seeing about what else can be done to help increase U.S. share in global manufacturing, if that's the ultimate aim. One thing which clearly doesn't help is a stronger dollar. That the U.S. has had a very strong dollar over the last 8 years. In fact, by some measures, the dollar today is the most expensive that it's ever been in its floating rate history, which goes back to the Bretton Woods system ending in the early 1970s. So under that environment, the U.S. is very uncompetitive, and that doesn't help its cause. And every time there is news of tariffs, the dollar only tends to appreciate, which is counterproductive and something that's happened over the last 8 years. So that's a very important policy tool the U.S. also needs to keep into account. And secondly, as I said, that even though tariffs have gone up, U.S. share in global manufacturing over the last 8 years, U.S. share in global trade over the last 8 years, all have come down. So this is not helping as yet. So I totally agree with you that the sentiment is that something needs to be done here because of the hollowing out that's happened in lots of America because of so-called globalization. But the policy tools so far haven't helped. I think one of the fundamental things that we don't acknowledge is that the U.S. consumes too much and China produces too much. That is just a fundamental issue. And when the U.S. runs a budget deficit, as we have discussed, of 6 to 7% of GDP, there's a result of that. You have a current account deficit because you're consuming too much of over 4% of GDP. And China, on the other hand, is running massive trade surpluses. So the basic problem of the China producing far too much and U.S. over-consuming and running a very low savings rate is an economic identity that is very hard to explain. But that's the reality that's driving these massive trade deficits, and also the dollar being so expensive makes the U.S. very uncompetitive.
But Ruchir, you just mentioned overconsumption. I mean, all of what you just said about the trade deficits is just a signal that the U.S. Economy is extremely strong, especially relative to the rest of the world. What evidence is there that the U.S., by not participating in all these trade deals, is losing out economically? Because right now, the U.S. is the envy of the world when it comes to economic growth.
Yes, so you're absolutely correct about that. And so therefore, the U.S. also, that also leads to some hubris and arrogance, right, when it comes to negotiations, because you think that the world needs you and so you can demand whatever you want from the world. Well, the two negative consequences, as I said, one is that the U.S. may look like the envy of the world, but remember, it's running a budget deficit of 6 to 7% of GDP, far higher than any other country. And that's what's also helping keep the U.S. economy levitated. And the second thing, as I said, that these are very long-term consequences. Trump himself is concerned about the fact that nations are trying to create their own reserve currency or reduce the dependence on the dollar as a unit of exchange, something that also happened after the Russian sanctions. Now, remember that the U.S., to fund its massive budget deficit, relies a lot on the rest of the world's savings. And so far, because of the AI boom, you've had a massive inflow of capital into the U.S., which has funded the huge budget deficit and the resulting current account deficit. But if the rest of the world gets much more concerned about that, that'll become difficult to do. And let's say that the world starts to move to alternative payment systems, and we have seen the rise of gold and even Bitcoin, for that matter, as sort of anti-dollar plays. That sort of will reduce the U.S. ability to run these massive budget deficits and keep printing these very high growth rates. So these are the consequences that the U.S. has to think of, that there are the law of unintended consequences, really.